Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Wednesday, October 10th, 2018, and here are some of today's trends in the news. On the market front over there in Asia, it was pretty flat, but in Europe, it wasn't a good day. You had the FTSE down, DAX down, CAC down, over 2%, and the FTSE 1.27. The Dow down over 3%. NASDAQ down over 4%. Oil took a hit, down over 2%. Gold flat, up a little bit. Bitcoin down a little bit. Dow plunges more than 800 points in worst drop since February. Yep, both the Dow and the S&P 500 posted their biggest one-day drops since early February, while the NASDAQ notched its largest single-day sell-off since June 2016. For October, the S&P 500 and the Dow are down more than 4.4% and 3.3% respectively. The NASDAQ, meanwhile, has lost more than 7.5%. And remember, a correction is 10%. This is October, and maybe you're going to see an October surprise. Rising rate fears, And a pivot out of technology stocks have made it a rough last few days. The Dow has dropped 4 of the last 5 sessions, losing nearly 900 points over that span. And you know why. They didn't mention one word here about tariffs and trade wars. We've been saying it from the very beginning. Going back to February, the markets can't take rising interest rates. We have sent out dozens of trend alerts in your Trends in the News, one after another, saying the markets cannot take rising interest rates. But Wall Street Journal, page 2, Kaplan backs 3 rate rises. Dallas Fed President Robert Kaplan said he still favors the central bank raising short-term interest rates 3 more times before deciding whether more increases will be necessary. This suggests the Federal Reserve should lift rates in December, March, and June policy meetings. Quote, unless something changes, Kaplan said on Tuesday. That something changes may be changing now. He and other Fed policymakers are lifting rates to ensure that the rapidly growing economy doesn't fuel excessive inflation or dangerous financial asset bubbles. Hey, guess what, Junior? You got a dangerous financial bubble now. It's bigger than a bubble, man. It's a balloon, a giant balloon, ready to explode. Equity markets are down around the world. In bear territory, correction territory. They need the cheap money fix. It's the only thing that boosted the markets following the panic of 2008. A fraudulent scheme by the banksters called negative interest rates, zero interest rate policy, and quantitative easing.
That was bullshit.
Bullshit that they made up. They didn't teach you this in school. The banksters did it, and now they're paying the price on the markets. Officials projected they would lift the Fed fund rates to 3.4% by the end of 2020. But yesterday, Trump says Fed is moving too fast. This is a real estate guy. They don't want to see rates go up. The higher the rates go up, you know the data we've been putting out week after week, day after day, about how the housing market's going down because they cannot take rising interest rates. And this is a real estate cat, man. President Trump repeated his displeasure with higher short-term interest rates set by the Federal Reserve. Speaking to reporters outside the White House on Tuesday, Mr. Trump said he believed the Fed was increasing its benchmark rate too fast. Quote, "The Fed is doing what they think is necessary, but I don't like what they're doing because we have inflation really in check." You don't see inflation coming back, Mr. Trump said. Now at some point it will. I just don't think it's necessary to go as fast on rates, he said. And then today, Trump said, he knocked the Federal Reserve for continuing to raise interest rates despite some recent market turbulence. Quote, "I think the Fed is making a mistake. They are too tight." Man, the cats are too tight. "I think the Fed has gone crazy." I think the Fed has gone crazy. Hey, a crazy cat should know what crazy is. The president said after walking off Air Force One in Erie, Pennsylvania for a rally. "Actually, it's a correction that we've been waiting for a long time, but I really disagree with what the Fed is doing," the president said. He disagrees because he knows where this is going. Again, this is a real estate cat. Can't take higher rates. More than half the S&P 500 is already in correction as sell-off worsens. There are 172 components in correction territory, meaning they've fallen 10 to 20% from the 52-week high. Meanwhile, another 123 stocks were down 20% from the level, sitting in bear territory. And here's bear territory around the world, market after market. And comes as no surprise to TrendsJournal subscribers. Go back 3 weeks ago. What was the headline? Trend alert. Economic 9/11. Gold, guns, and a getaway plan. Are you prepared for the next financial crisis? The exploding debt bomb that will rock the world? Even with slight interest rate rises, as evidenced by the U.S. rate hikes, emerging market currencies have hit new lows against the dollar and are sharply declining, pushing their equity markets into bear territory. We're the only ones that were saying this. They're talking about tariffs and trade wars and tariffs and trade wars, and Kavanaugh. We go on to say, trend forecast, the market crash is coming. Also be prepared for social unrest to escalate, guns, gold, and a getaway plan. Which brings us to gold. Didn't do much of anything today. Why? Because they believe that the Fed is still going to raise interest rates. If the Fed keeps raising interest rates, this market's just going to go lower. If they don't raise interest rates, it'll juice it again, like they've done it before. But you have other fundamentals out there. And one of them is oil. But oil prices went down today because we're looking at a global slowdown. So what about gold? It's in your trend alert. Your trend alert. Gold's down but not out, and here's why. And you know the whys. You're seeing it in the markets, and again, watch what happens with oil. Oil prices are down, but there's going to be an embargo going on November 5th against Iran, and if there's a shortage of supply and demand outstrips it, you're going to see oil prices spike. You know, one of my sayings is that when all else fails, they take you to war. And the war we're worried about is in the Middle East. Wife of Israeli Prime Minister goes on trial for fraud. Yep. You know what's going on over there? Unrest with the Palestinians, Israel attacking Syria at will, killing Iranians as they're at it, and maybe a couple of Russians along the way. the ingredients for an explosion in oil prices and plunging equity markets have never been stronger in the last 5 years, as we forecast, and from the data that we're collecting. On Tuesday, the overnight cost of borrowing yuan for Hong Kong banks jumped to 5% from 1.745% a day earlier, hitting its highest level since May. The rate for one-week lending reached 7.6% Tuesday, up 4 percentage points since last week, to its highest level in over a year. The strength of the dollar, higher tariffs on Chinese imports to the U.S., and slower Chinese economic growth have all weighed down on the yuan in recent months. While a weaker yuan could help offset some trade pressures on Chinese exporters, which is only minimal, and Mnuchin, our Treasury Secretary, is blaming them for bringing down the yuan intentionally, and that is nothing more than Mnuchin.
Bullshit detected. Take precautions.
They're dumping dough into the country. Fixed asset investments at an all-time low. They don't want the yuan to get lower because, as it says here, it could also encourage Chinese residents and businesses to place their capital abroad into safe havens, weakening the currency further. The yuan's trade-weighted index has dropped by about 5.6% since May. Pakistan's rupee, hit by bailout bid. The Pakistani rupee dropped steeply against the dollar Tuesday after the government said it was seeking a bailout from the IMF, the International Mafia Federation. Hey, we're going to loan you some money, but you got to do what we tell you to do. And that means you got to steal more money from your people. You call it austerity measures. But we say it in a polite way, and we put our IMF front, Miss Lagarde, out there to say it in a proper way. And you rob them of their pensions, you raise their taxes, and you increase their retirement ages till after you die. Cash-strapped countries advised to manage assets better. Cash-strapped governments could find big new sources of revenue if they manage their assets more professionally, the International Mafia Federation said yesterday. Hey, got some. Cash-strapped countries? You mean like the United States with its $20 trillion debt? How about Italy? Go around the world. You know what this is? Nothing more than a load of...
Oh, come on now. That ain't even bullshit. That's horseshit.
It's horseshit. Turkey's all-out fight against inflation starts with plea for voluntary price cuts. Turkish finance minister has set out a new approach to tackling the country's soaring inflation and crashing currency by urging the nation's shops and businesses to give consumer discounts to keep prices in check. They called upon companies to agree to 10% price cuts on products until the end of this year. They ain't going to do anything. Tata shares sent tumbling after JLR announces plant stoppage. Indian car maker Tata Motors lost nearly a sixth of the market capitalization a day after subsidiary Jaguar Land Rover announced a 2-week shutdown at one of its factories because of weak demand. Escalating trade war dents car makers. Now, it's not escalating trade war, it's lower demand because people got no dough. We are in a very, very critical period right now. Stay tuned to the facts. Tune into Trends in the News. Keep looking for more trend alerts. And stay alert. An economic 9/11 may be right around the corner. Guns, gold, and a getaway plan. This is Gerald Celente, and that's some of today's Trends in the News.